Let's go ahead and hit social media for our hashtag segment. For that, we'd like to welcome in Megan Brantley, the VP of Research at LikeFolio.com. And we have Jenny Horn here with us in studio, talking something I'm not super familiar with, but that's SFIX.
SFIX, which is hard to say if you say it a bunch of times over and over again. So they have earnings post-market today, and although the indices may be boring, that stock is up, I think, around 3% on the day the last I looked. But they IPO'd in 2017, and in the summer of 2018, the stock surged something of 240% from their IPO price, but now they're trading around 50% lower from their all-time highs of around $50. So this is a stock that has moved since its IPO, kind of similar to the recent IPOs we've seen, but it's a subscription space, which is a hard space to be in right now. So Megan, I'm curious to see how this stock is faring as of lately.
Yeah, so whenever we look at SFIX, we're listening for people who are subscribing to this service. Maybe they're keeping things from their boxes. You know, what this company does is they send you these personalized clothing items or fashion items that you can decide to keep some or all of your box. Of course, they incentivize you to try to keep and purchase more items out of your box. And whenever we look at purchase intent for SFIX, we actually see some decline. And, you know, whenever you look at this chart, I brought up mention. So this is overall buzz. So we saw a little bit of decline in year-over-year purchase intent for SFIX, down about 25%. When you look at buzz, this general volume of mentions of people talking about SFIX is also down. We've actually found that this mentions is highly correlated to revenue for SFIX. So that's why I'm showing you mentions instead of purchase intent. And you can see that that is still down about 16% right now. So going into this quarter, we're not expecting anything super impressive from SFIX, but I think that the company also guided for a softer quarter. So this is pretty in line with what the company kind of tempered expectations for.
Megan, is this one of those companies? This was really cool a little while ago, right? They send you the clothes. The idea is kind of nice in the world we live in now, where they send you clothes, you keep what you want, you send back what you don't want. Sounds very simple, but yes. It hasn't taken off, I think, like they thought, has it? Or it hasn't gotten as popular as they thought.
Yeah, I think that, you know, we've seen some drop off from those post-IPO, that hype that Jenny was talking about earlier. I think the stock has kind of reacted accordingly. What's interesting is their growth fields are actually in kids and men's. So I think that's interesting. You know, maybe men are less likely to tweet that they're, you know, getting a SFIX box. I don't know, but that's something that we're definitely watching for going into this quarter.
Yeah, and I have to say there's a lot of bearish headwinds, of course, around this company because subscriptions aren't really faring that well in this environment, but they did report an 18% increase in active users last quarter. So more people are actually signing up, despite the fact that there were not many people talking about SFIX today on social media. So our first tweet says, SFIX earnings due Monday, December 9th after the close. Company making a turnaround. Strong earnings could push stock higher, especially with over 45% short interest. On October 10th, 2019, Director bought 150,000 shares, equaling 3.1 million. Also, Benchmark Capital owns over 15 million shares. So trading this company going into earnings, Kevin, I mentioned that they're 50% off their all-time highs at around $24 right now. How do you trade them going into earnings?
Well, it depends if you believe, right? Like the CEO clearly believes. Right. He just put 15 million into the stock.
Right.
That's a really good sign, by the way. When you see a CEO when the stock is at depressed levels and he comes out and basically makes a headline saying, I just put $15 million into this company, that means he believes, right? So that's a good sign. Well, yeah. But can they get the growth that Jenny said, and not only get it, but sustain it?
To clarify, it looks like it was a director who bought $3.1 million. And then it's like a hedge fund, Benchmark Capital, that owns 50 million shares. But still, you have investment from the company's leadership back into it, to Kevin's point. But when you're talking about this one, Megan, I got a question for you regarding kind of the overall trends in this space, and I'm hoping that you have some answers for me. Is this a SFIX decline that we're seeing, or is it, to Jenny's point, an overall subscription-based fatigue as more copycats have came into the space, or what are we looking at here? Is it SFIX struggling, or is it an overall industry struggling?
You know, that's a really good question. One of their top competitors that we look at is actually owned by Nordstrom, the Trunk Club, and we actually see a similar pattern in Trunk Club. I believe the overall buzz for mentions of that is down about 13% year over year. Stitch Fix Buzz down about 16% year over year, but that's pretty comparable. One positive note for Stitch Fix is we are seeing some purchase intent recovery going into this current quarter. So not the quarter that they're about to report on, but we're starting to see a little bit of improvement going into the quarter that we're currently in. So that could be a positive note in regard to guidance. I think that's really what killed them last quarter.
Absolutely. And Megan, you mentioned Trug Club, which is interesting because I also was looking at Newly, which is urban subscription service. There's a lot in this space. And I was kind of looking at social media today who seems like they get the most most positive reaction. And it seems like it is still Stitch Fix because people really do like Stitch Fix on Twitter, at least this morning when I looked. So our next tweet is from Christopher Wong, who says, Stitch Fix is the perfect example of a great idea with flawed execution. Customer experience overhaul badly needed at Katrina Lake, the CEO. Last 3 fixes all arrived late. $20 styling fee should roll over as a credit towards future fixes and work on sizing properly. Bezos and Amazon are coming. So this tweet was not the only mention I saw of fear in this Amazon space, but it often seems like with Amazon, we talk about a lot in the show, that it's overhyped. I mean, we've talked about all these different spaces that we thought Amazon would, of course, enter, but they haven't really done that great of a job. So do you think this company is Amazon-proof, Megan?
You know, that's really tough. I think one thing Stitch Fix does have going for them is they take this personalization angle really seriously. You know, they have this really intense team of data scientists. They really try to curate the items to the person who's ordering their box. And overall happiness levels for Stitch Fix is around 82%. That's actually pretty positive as a whole. So I think that really it's just a test of, like you guys mentioned, can they continue to grow and can they continue to capture these new audience like men and kids moving forward?
So Megan, Jenny, help me here. All right? Help the old dude. So I have walked into a store in my life and said, yeah, mannequin, like it. I'll take that right there as that looks, right? So this is basically what that is, right? They're basically sending you how they would dress a mannequin. So isn't this company basically beholden to if the designer or the person that picks out has a hot hand or not?
Right.
Right? And they got to get to know you and send you what they think you'll know. You know, if they would have sent me pleats, my wife would have killed me and sent them all back. But now, if they don't send me pleats,
thank goodness.
That's good. See,
right?
So we have all. So what I'm saying is, isn't the success of this company based on that guy's ability to get you right, get that idea right?
Yes. So I think a lot of times if you have a shopper you don't like how they're doing, you can change your shopper and modify that.
Yeah.
Because I did my market research, of course. I did do Stitch Fix. And you do change your shopper. So say you didn't like one box and you have a new shopper for the next box.
You're a horrible shopper. Move me on to the next person.
Which I would never say, but similar to that, yes.
Megan, kind of wrapping it up here. So we see mentions declining year over year. You mentioned purchase intent declining year over year, but you also mentioned, hey, the company's kind of teased that this is going to be the case. They've teased and kind of guided to a weaker quarter, kind of in line with what you guys are expecting too. Do you have a longer term feel? Do you track happiness at all around Stitch Fix? Do you have confidence in this company's ability to stabilize and turn things around?
You know, that's a really good question. Like I said, you know, the quarter that they're currently reporting looks a little softer, and this is what we're expecting. There is a little bit of a resurgence in purchase intent and buzz. It is improving going into the current quarter. Happiness is pretty stable around 80%, so those are positive signs. I don't think that it's enough to establish a super long-term position, but I think that it is trending in the direction that the company would like to see as opposed to this quarter that they're about to report.
All righty, Megan, great stuff. 80% happiness seems high, but I don't know what it looks like compared to competitors. Jenny, thanks for the insight as well.